got the papers in the moment. First, though, business with Kate Moody. We're starting with another financial blow. This is for Yahoo.
Yeah, that's right, Stuart. The internet giant has once again missed market expectations. Second quarter revenue down 19% compared to the same period a year ago. Now, crucially, there was also no update from Yahoo about a potential buyer for its core internet business, though final bids were reportedly due on Monday. Some analysts still predict that a sale could be done by the end of the month. Catherine Clifford has the details.
It's seen as a final report card for Yahoo CEO Marissa Mayer's turnaround. The company's latest earnings report shows revenue fell 19% from a year earlier, while losses grew to $440 million. When Mayer took the helm 4 years ago, the company was already in decline and has since gone from bad to worse. In February, Yahoo cut 15% of its global workforce as it focused on trying to sell off its core internet business. Now, analysts say whoever buys would be likely to cut some 3,000 more jobs. So where is the company losing money? For Mayer, the problem lies with weak demand for Yahoo's ad products. Advertisers have poured money into digital marketing as social media use has soared. But most of the advertising has flowed to online leaders Google and Facebook. Yahoo attempted to join this race through buying social media platform Tumblr. However, it wrote down $482 million in charges linked to Tumblr's declining value in this latest report. This after Mayer forked out $1.1 billion for it in 2013. Since then, Tumblr's value has plunged by almost two-thirds. Analysts have estimated the sale of Yahoo's flailing search and advertising business will fetch $4 to $8 billion. Experts say Verizon, the telecoms giant that recently bought AOL, is a top contender. Yahoo would still have its stake in the Chinese Alibaba Group, a stake currently worth $32 billion.
Catherine Clifford there. What about the markets, Kate? How are they faring?
Well, European markets just opening a few moments ago, and they are all in negative territory, just slightly there. The CAC 40 down about 0.4%, the Frankfurt DAX a bit more, London FTSE opening down about 0.33%. Oil prices have been dropping a little bit, and global investors are unsettled by geopolitical strains around the world that we're seeing. Asian markets mostly lower, except for the Nikkei, which bucked the trend to close up about 1 1/3%. A couple of big movers to highlight. SoftBank shares down over 10% in Tokyo after its €29 billion deal to buy the British chip designer Arm. That's the first big takeover in the UK post-Brexit. The messaging app Line also down about 10% after its successful dual listing last week in New York and Tokyo. Nintendo, meanwhile, is continuing its upward trend, trading up 14% on Tuesday as its game Pokemon Go continues to sweep the globe. Earlier in the session, it surpassed its rival Sony, with its market value topping $39 billion. Let's take a look at some of the day's other business headlines now. Netflix reported higher than expected number of canceled subscriptions in the last quarter and slower growth. The video streaming service plans to raise prices slightly in the US this year, which analysts say is encouraging prospective customers to consider rival services like Amazon. Shares dropped 13% in after-hours trading. U.S. authorities are investigating whether Fiat Chrysler may have inflated sales reports. Two car dealerships in the Chicago area have reportedly alleged that the company offered them money to report unsold vehicles as sold. The car company says it's cooperating with the investigation. And IBM's revenue declined 2.8% over the last 3 months. That's the 17th consecutive quarter in the red. The tech giant did report slightly higher than expected earnings and said it was on track for its objectives this year. IBM has been investing heavily in cloud computing, data analytics, and cybersecurity to offset declines in its software business.
Now, this last story from Kate, we were chatting about it earlier on, we quite fancy it. It's one of the most successful movie franchises in Hollywood, and it's going to be featuring this time around a bit of a cameo from one of the most successful business titans in Silicon Valley, isn't it?
Exactly, but you're hoping to get a cameo
I am. I want to go as well.
Stuart.
I fancy being an alien.
Well, this is the new Star Trek film that's going to be opening in the US on Friday. And if you look very carefully among the aliens in the cast, you may be able to pick out Amazon founder Jeff Bezos. Now, he's known to be a big fan of the sci-fi series. He's said that the Star Trek computer actually helped inspire Amazon Echo, which is his company's voice-controlled speaker. Star Trek Beyond, of course, the third installment in the rebooted series, which has earned more than $850 million since 2009. So not a bad move on his part. Perhaps.
Pretty good. I've got myself some tentacles.
Is that your audition
that
tape?
is
Official
my
audition
outfit.
tape
If I duck
there.
down, there you go. That's my tentacles. You never know.
We'll pass it along to Hollywood, see
yeah,
what they
there
think.
could be somebody watching. You just never know. Kate with business.